What's going on, dividend chasers? It's the Dividend Bloodhound here, back with another investing episode. As you can see in today's episode, I've been a little bit busy. I've been painting and decorating in our brand new home, and a video on this will be forthcoming in the future. But today we're talking about the usual stuff, which is stocks on Trading 212. So today we are talking about the best stocks you can buy no matter who wins in the US presidential election coming next month on the 3rd of November. Not very far away now at all. No matter whether you're Team Biden or Team Trump, no political persuasions here in this video at all. I really am neutral at this point of view. I'm just solely interested in the stock market. This is not a political video. If this video sounds like something you're interested in, then do please stick around after the intro and consider liking the video and subscribing and ticking the notification bell on my channel as well. Be absolutely fantastic to see you on the other side of the intro. See you there. Hey again guys, welcome into the video. So we are looking at the best stocks to buy no matter who is president of the United States. Biden or Trump, these stocks will do well almost no matter what. The first thing we have to consider is the macro and the micro economic environment that is coming up over the next 12 months or longer, or even the 4 years over the presidency until the next presidential election. We have to remember that no matter who is president, there is still a global pandemic happening. Cite everything that's happening in the world right now. Energy companies absolutely battered, no travel restrictions, etc. Over the pond, we still have Brexit to deal with over here, and the markets are still a little bit uncertain as to how that is going to affect the world. There are still global tensions. The world is a little bit like a tinderbox at the moment, with tensions with China, tensions in the Gulf as well over oil and the passage of trade through the area. And there's all sorts of little wartime, or could be seen as high tension areas, pockets of that all over the world, and obviously the markets have got to take that into account as well. And then also there is a divided America. You've got the Black Lives Matter movement, you've got all sorts of political effects going on over in the States, of course, where you've got two, not extremes, but two very, very different camps going on in America at the moment, the Democrats and the Republicans, and then the extreme versions of both parties, etc. That is all something to weigh up when we get into investing. However, let's have a look at the stocks that I've brought to you today. So our first stock today is waste management. Now, it is a fundamental fact of life that people need to have their bins emptied and their waste disposed of. It is practically, if you live in a civilized society, you need to have your bins dealt with and waste disposed of correctly, especially in these times of environmental impacts. It really needs to be done by a professional person. Now, this company, Waste Management, has got a fantastic history. It really has been going for a very long time, and it is excellent at obviously what it does. It's got a dividend yield of 1.88%, a 10-year compound annual growth rate of 5.86%, and a 17-year dividend growth streak. So it's very fast approaching dividend aristocrat status. Now let's get into the app and let's have a look at this company a little bit more close up. See you in there. Hey again guys, welcome into the app. So here we are looking at Waste Management, ticker WM. Share for this at the moment comes in at $116. Way back peak pandemic, it dropped to approximately $89 and has since recovered back to $116, and it peaked at $125 before the pandemic began properly. So it has a market cap of 48.29 billion, a PE ratio of 26.87, revenue of 15.46 billion, earnings per share at $4.27, and a dividend yield of 1.91, slightly up of what I said earlier on 1.88. Has a net income of 1.67 billion and a profit margin of 10%. Good double digits profit margin there. We have a debt to assets ratio slightly higher at 74%, 4%, but also not too much of a red flag for a company like this. And then if we hop on over to the growth metrics, we can see just how the company has been doing recently. So we've got EPS growth over 3 and 5 years at 7 and 13%, a 5-year compound annual growth rate at 4.26%, and a 3-year dividend growth of 7.7%, and it has been growing this for 17 years. So that is a pretty decent return at all. And that wraps us up here, so I'll just catch you back in the real world. See you there. Hey again guys, welcome back to the real world. That was Waste Management there, a good fundamental company. It's one of the pillars of life, along with utilities like gas, water, electric. People are always going to need this, and Wi-Fi as well, there for example as well. There, no matter who's in charge, no matter what's going on in the world, these things are going to need to be done. And the next stop we're going to move on to is Clorox. Clorox, despite its history, was an actual relatively unknown company before the global pandemic. But since the pandemic has actually happened and demand for cleaning products and bleach has gone through the roof, Clorox has already now become a household name. It seems to live in the shadow of P&G, which is its dividend king cousin, so to speak. And everybody seems to know about P&G, but not so, or Procter & Gamble if you don't know what P&G means, and not so much about Clorox. But this company is also has a phenomenal history as well. 43 years of dividend raises, a dividend aristocrat for now, and pretty sure it will make king status in the near future. The global pandemic, no matter who ends up in the White House, is going nowhere anytime soon. So it's safe to assume that this company's products are going to be massively in demand for the near future as a minimum. And the company was obviously doing pretty well beforehand anyway. The company's share price is up 36% year to date because investors have switched on to the fact that its products are in demand right now. As I mentioned, 43 years of dividend growth and raises, no reason to think that that's going to stop anytime soon, and a great compound annual growth rate of 7.72% over 10 years, and this is only going to get better at the moment due to the pandemic. Sadly, obviously, I know there's a lot of human lives at cost there, but we deal with what we're given and investors have got to react to that. Anyway, let's get into the app. Let's have a look at their fundamentals a little bit more closely. See you there. Hey again guys, welcome back into the app. So here we are looking at Clorox, ticker CLX. A share in this company at the moment will cost you $211. It peaked in August at $237. And then back when the pandemic began, it dropped from its little mini peak of 198 down to 168. And if you bought in, then kudos to you, because it's now up at 211. So you've made a pretty healthy return. So it has a market cap of 26.42 billion, a PE ratio of 28.47, revenue of 6.72 billion, earnings per share of $7.37, a dividend yield of 2.12%, a net income of just shy of 1,939 million, a healthy profit margin of 13.97, and a debt to assets ratio slightly higher than the previous one at 87%, but still nothing to be alarmed over, as it's not over 100%. If we hop on over to the growth metric side of things, sorry, my voice went really high pitched then, I'm not sure why. 3 and 5 year revenue growth have been 3.5% and 4%, which is pretty good. EPS growth efficiency is 10 and 11% over 3 and 5 years. Compound annual growth rate over 5 years is 4.21%. Free operating cash flow 15.83 over 5 years. And 3-year dividend growth rate just shy of double-digit growth. It would have been fantastic if it broke that, but it is as near as can possibly be, to be fair. So I would be pretty happy to buy in this company and hold out. So this company has a fantastic history anyway, but it's only going to be even more in demand at the moment due to the pandemic. Welcome back everybody. So that was Clorox there. Fantastic company, fantastic history. Products are already being used throughout households all across America anyway, and the UK probably. However, global pandemic has pushed demand through the roof for its products, so it's going to continue growing its revenue stream over the short and medium term, because as I said, this pandemic is going nowhere. But yeah, absolutely fantastic. We're going to move on to the next company now, and the next company is Apple. Now, has there been a global pandemic going on? You should probably tell the Apple share price that, because it has just almost ignored it. It completed the V-shaped recovery almost immediately within a couple of months, and has gone from strength to strength then, and has even done a stock split to lock in the value of the increase that it had over the last few months or so. Apple is very quickly becoming one of the world's most famous and favourite brands. No matter who is in the White House is completely irrelevant at the moment, really, because this company has got more money than most countries, to be fair. It operates an incredible cash flow. It is absolutely insane. In fact, at one stage, I think it still is Apple was worth more than the entire FTSE complete. The entire FTSE 100 was worth less than Apple, just one company. That is absolutely insane for one company to have that much revenue, make that much profit, and be sitting on the amount of cash that it is. The company is up 57% year to date. Yeah, you heard that right. A dividend yield of 0.7%. That's quite low, but you can bet they're going to be growing that, and I can see a future dividend aristocrat and dividend king here for sure. And it has a 10-year compound annual growth rate. I believe it was 10 years. No, yeah, my notes were wrong there. 5-year compound annual growth rate of 10.5%, which is absolutely fantastic. Let's get into the app, let's have a look, but I'm sure you are already well confident in Apple, but let's have a look anyway. Hey again guys, welcome back into the app. So as we can see here, my app actually says that Apple is 86% up on the last year. Oh, that's different, this year to date, this is a whole year. Never mind, cancel that. A current share price will set you back $115. Peaked in August at 134, which is when it actually did its stock split, and then it's came down a little bit since then. But it's still a really decent price to buy in at, in my opinion. It has a market cap of $2 trillion, absolutely insane. The ticker is AAPL, which I'm sure you guys will already know. A PE ratio creeping up slightly high, actually, to be fair, with the amount of value placed on this company of 39. You would expect it to be a little lower than this usually, but still, the amount of value that Apple attracts, I wouldn't be worried about a PE ratio of 39, not when you consider where Tesla's PE ratio is anyway. Revenue of 260 billion, it's almost laughable, that's huge. EPS of $2.97, a dividend yield of 0.7. Net income of 55.26 billion. As I said, it is a cash flow, cash keeping monster. A profit margin, the highest today at 21.24. Debt to assets ratio at 73%, no real concern there. Hopping over to the growth metrics, where we're going to be pleased again. 3-year revenue growth 7.3, 5-year revenue growth 6.4, EPS 3-year 12.99, over 5 years 12.69, compound annual growth rate over 5 years 4.8, and dividend growth in the double digits over 3 years 11.23%. And with that much cash flow, that much revenue, that much profit, so it should be as well. I'm going to wrap things up there, and I'll see you back in the real world. Welcome back to the real world, guys. So that was Apple there, needs no introduction. Value, stock, absolutely. Will the president do anything about it? Absolutely not either. The company is still just so valuable, offering so many products. It just can't be beaten at the moment in terms of where your money is safest. Now, that wraps us up for today, really. I really hope you've enjoyed this video. It's been an absolute pleasure to bring to you. If you're still here at the end of the video, I massively appreciate it. Thank you very much. Please go that extra mile and hit the like button. That would be fantastic. And if you haven't subscribed yet, then please do so as well, and tick that notification bell. Hopefully, I'll see you in my next investing episode. Have a good one, and I'll see you another day. Bye-bye.